Today, we're diving into the question that many people grapple with at some point in their lives. Should you rent or buy a home? It's a decision that can have a profound impact on your financial well-being. So, in this video, we'll break down the pros and cons of renting and buying, helping you to decide which option is cheaper for your unique situation. Let's start by examining the cost of renting. Monthly rent. Monthly rent is typically the most visible cost for renters, encompassing the base rent as well as utilities like water, electricity, and gas in some cases. It's important to understand that this cost is predictable and remain consistent over the lease term. Maintenance. One significant advantage of renting is that the tenants are generally not responsible for property maintenance or repairs. Any issues with the property are typically handled by the landlord, reducing the financial burden and responsibility for renters. Flexibility. Renters provide more flexibility to move. Lease terms are often relatively short, typically lasting a year or less, which means renters can adapt to changes in their personal or professional life more easily without the constraint of home ownership. Next, let's explore the cost of buying a home. Down payment. One of the most substantial upfront costs when buying a home is the down payment. It is typically around 20% of the property's purchase price, although there are options for lower down payments with certain loan programs. Saving for this down payment is a crucial step in the home buying process and can often take years of disciplined savings. Monthly mortgage. Monthly mortgage consists of several components: the principal, which is the amount you borrowed, and the interest, which is the cost of borrowing that money. Additionally, property taxes and homeowners insurance are often rolled into the monthly mortgage payment, making it a significant financial commitment. Unlike rent, this payment can change over time due to fluctuation in interest rate or changes in property taxes. Maintenance. Homeowners are responsible for property maintenance and repairs. Regular maintenance tasks like lawn care and pest control, as well as unexpected repairs such as a leaking roof or a malfunctioning HVAC system. These ongoing expenses must be budgeted for and can vary widely depending on the property's age and condition. Equity. As homeowners make mortgage payment, they are paying down the loan principal and building equity in the property. This equity can be tapped into through home equity loans or lines of credit or realized when selling the property, potentially providing a source of wealth accumulation. Before we proceed, just a quick reminder, don't forget to subscribe to this channel. Next, it's time to weigh the pros and cons of renting. The pros: renters' flexibility, which allow renters to move relatively easy when their lease term ends. Renting has lower upfront costs, making it accessible for those who can't afford a substantial down payment. Additionally, renters are typically not responsible for property taxes, insurance, or major repairs. However, the cons are renters don't build equity in the property, which can be significantly disadvantaged in the long run. Over time, renter will miss potential financial benefits such as home value appreciation, and there is a possibility of rent increase over time, which can disrupt budgeting and financial planning. Now, let's examine the pros and cons of buying a home. The pros: home ownership provides sense of ownership and stability. Owning a home allows for personalization and customization, such as renovating or landscaping to suit one's preferences. There will be a potential for property appreciation as a long-term investment, which can lead to a substantial financial gains when selling. In addition, tax benefits home ownership, such as the deductions for mortgage interest and property taxes. However, the cons are high upfront costs, which are associated with buying, such as the need for a substantial down payment and closing costs. Homeowners are responsible for ongoing maintenance and repairs, which can be unexpected and costly. Homeowners will face lack of flexibility as homeowners may find it more challenging to relocate quickly, especially if they had to sell their first home. So, which option is cheaper for you? It depends on your financial situation, goals, and priorities. First, evaluate your finances. It is important to assess on your current financial health. This includes looking at your income, savings, credit history, and existing debt. It is a crucial aspect in determining how much home you can realistically afford. Second, consider your goals. Discuss long-term goals in more detail, such as how you plan to stay in a particular location. Homeownership can be a long-term investment and the potential wealth-building benefits it can offer over time. Third, weigh your priorities. Emphasize the importance of deciding what matters most, whether it's the flexibility of renting, the potential wealth-building benefits of home ownership, or a balance of both. In conclusion, the question of renting and buying isn't one size fits all. It's a personal decision that depends on your unique circumstances. Renting can offer flexibility and lower upfront costs, while buying can provide a sense of ownership and potential financial benefit. Thanks for joining us today. If you find this video helpful, don't forget to like, subscribe, and hit the notification bell to stay updated on all things related to real estate. Remember, whether you choose to rent or buy, the most important thing is to make an informed decision that aligns your financial goal. Until next time, take care.